San Francisco, and this is Bloomberg Technology. Coming up in the next hour, President Trump on the attack over GM's plans to cut jobs and factories in the United States, threatening cuts to subsidies for electric cars and add new tariffs on car imports. Plus, Samsung's push from hardware to software and everywhere in between. The Samsung next president weighs in on the slowing global smartphone market. And Facebook under fire yet again. Why a former employee is going public with claims the company has a racism problem. But first to our top story, President Trump has been on the warpath over GM's plan to cut 14,000 jobs and shut down 5 factories in the United States, floating the idea of new tariffs, tweeting, "The reason that the small truck business in the U.S. is such a go-to favorite is that for many years, tariffs of 25% have been put on small trucks coming into our country. If we did that with cars coming in, many more cars would be built here. And GM would not be closing their plants in Ohio, Michigan, and Maryland. Get smart, Congress. Also, the countries that send us cars have taken advantage of the U.S. for decades. The president has great power on this issue because of the GM event. It is being studied now." This after he threatened to cut GM subsidies, including those on electric vehicles, which saw Tesla shares jump Tuesday. Joining us to discuss all of this, Bloomberg's Detroit bureau chief David Welch and Bloomberg New Energy Finance's Salim Morsi with us from L.A. So, David, I want to start with you. What do you make of this? Not just the tax credit issue, but the tariff issue and the uncertainty. What does it mean for GM and other automakers?
Trump wasn't really clear what he means by bringing back the chicken tax, because there is a tax on imported pickup trucks. If he were to put that on cars, does that punish GM somehow? The only way it would is if he were to really basically redo NAFTA, and he's already reached an agreement with Canada and Mexico on a differently named NAFTA, but it's still very much like the NAFTA that the companies have lived with. If he were to add tariffs, GM brings in about 1 million vehicles a year from its plant in Mexico to the U.S. That would hurt them, but again, he'd have to redo a trade deal that he has already adjusted and agreed upon. If he were to put tariffs on vehicles from Asia or Europe, GM brings in very little from there, so it's really not going to affect GM in that sense. If what he's doing is using this for political capital to say we need bigger tariffs on cars coming in from a variety of other countries because, look, Exhibit A, General Motors just laid off a lot of people, that's a different issue. That's not going straight at GM. It would be probably more widespread tariffs on Asian and European vehicles that he's been threatening for some time, and that would affect really not American car makers, but it would affect foreign car makers quite a bit because they import a lot of vehicles into the U.S. every year.
Now, this tariff on trucks dates back to the 1960s when the U.S. retaliated against chicken tariffs in Germany. So just some context there. Salim, what does this mean for the financing of electric cars and the impact on electric car sales in general?
Well, assuming he is referring to the federal 7,500 tax credit that buyers of EVs are available can get in the U.S., it would impact the industry. Sales would likely decline because buyers obviously are price sensitive to these things. However, in the case of GM, interestingly, they are hitting a threshold beyond which the tax credit actually phases out. So should this tax credit be repealed, ironically, it wouldn't deeply impact GM. It would impact competitors like Ford and Fiat Chrysler, who are way behind. As for Tesla, we think they hit that threshold. It's a 200,000 cumulative EV sales, electric vehicle sales in the U.S. We think they hit that threshold last quarter in Q3. And again, they would also have sunsetted that benefit. So ironically, for all the bluster that Trump is putting out there, it wouldn't really impact GM, or certainly not Tesla either.
Now, Trump is piling on to this tweet from Tuesday where he says, very disappointed with GM and their CEO, Mary Barra, for closing plants in Ohio, Michigan, Maryland. Nothing being closed in Mexico and China. The U.S. saved General Motors, and this is the thanks we get. We are now looking at cutting all GM subsidies, including for electric cars. General Motors made a big bet on China years ago when they built plants there and in Mexico. Don't think that bet is going to pay off. I am here to protect America's workers. GM, along with Tesla and Nissan, have actually been lobbying to extend some of these tax credits. David, where does that stand?
So there is a proposal out there that would extend for another 10 years the EV tax credits, and right now it's just kind of being kicked around in Congress. The latest, I think, was the Republicans in Congress really aren't in favor of doing this, and so, but there's a lot of horse trading going on. Trump could just, really use political pressure to make sure that doesn't come back into the new budget, and just let the existing program phase out rather than re-up it. That would hit GM. It would hit everybody, though. His threat to just cut GM subsidies, it's unclear how he would just go after General Motors and not punish other car makers as well. So there's a proposal out there. It's not set in stone, and he could just let that phase out or veto it if Congress did try to put it in the budget. There are a lot of ways he could stop that if it goes forward.
Well, other automakers are reacting to all of this, including the uncertainty and the lack of clarity on what the president actually means here. Take a listen to this from Volkswagen North America CEO Scott Keogh.
We think even the conversation of tariffs and trade wars and all of these debates bring instability and bring unknowns. And frankly, I think lack of stability and unknowns is not a good thing for business. So we believe in free trade. We believe in fair trade. We believe in an open marketplace. That's what we need. We make investments that are 10, 12, 15, 20-year cycles, as you know, and you can't have the chess pieces moving all the time.
Salim, one thing we can be sure of here is that there is now uncertainty that has been cast into this equation. How will that impact not just GM, but Tesla, Nissan, and others, and Volkswagen?
Well, so the global EV market is not hanging on every word of President Trump. There are many other schemes that are, for the time being, very important and pushing these vehicles into the market. We can think of the California state tax credits, and of course other big markets like China and Europe. As I said, I think if this federal tax credit were to be immediately repealed, again, hard to see, it would impact a number of manufacturers, as you mentioned, the Nissans, the Fiats, the Fords in the U.S., and sales could decline. But most importantly, I think the bigger picture here is that the fundamental technology that drives these vehicles, batteries and battery prices in particular, are falling. And we think that in the next 5 to 7 years, without any subsidies, these vehicles will be cost competitive on an upfront basis with conventional internal combustion engines. So it's important to kind of put this into context. Over the long term, electrification does not really rely on subsidies. In the short term, it is important, and it would certainly put a drag on sales in the U.S.
David, what does it mean for Tesla more specifically? Obviously, an electric car company that is also building a factory in China.
Well, if you're talking about the tax credits, like Salim just said, it doesn't really mean much for them. The trade war, that is a much bigger problem because right now Tesla is exporting a lot of vehicles to China, and they're going to be building more there. At that point, it doesn't really hurt them as long as they intend to sell their Chinese production to Chinese buyers as opposed to bringing them back to the U.S. I think that would be problematic so long as the Trump administration is calling the shots on trade.
All right, Bloomberg's Detroit Bureau Chief David Welch there, along with Bloomberg New Energy Finance's Salim Morsi. Much more to come as we head towards this meeting with President Xi Saturday. Sticking with electric cars, automotive startup Rivian unveiled 2 all-electric vehicles this week at the LA Auto Show. The company debuted the R1T, a 5-passenger electric pickup truck, alongside the R1S, a 7-seater SUV. After 9 years of design and development, Rivian plans to hire as many as 1,000 employees to manufacture the electric adventure vehicles, with production expected to begin in 2020. Rivian CEO RJ Scaringe joined Bloomberg's Brad Stone from the LA Auto Show to discuss.
For us, I mean, there's just a lot of excitement, of course, from the consumer side. I think the manufacturers are looking at this and they're really, impressed with what the vehicle's capable of. And, because of that, part of our business, beyond creating our products for consumers, is to take some of the technology, what we call our core skateboard, the drive system, the battery system, the cooling system, the digital layer within that, and apply that to other applications with customers that are not, with customers that are other businesses, whether those are other manufacturers or players that are more in the technology or mobility space.
so licensing the technology. Have you gotten any interesting M&A queries from conventional automobile manufacturers?
We have good relationships with a number of manufacturers, but that's not the objective of the company. Really, the vision and the desire, the reason I built this company was to make sure we could take technical problems and problems that, things that were thought of as being impossible, and use technology and innovation with a really collaborative working environment to help solve those. So at this point, we continue to really remain focused on delivering those products. And of course, we're looking at opportunities to leverage and utilize our technology, but our focus remains on launching these products, and we're very close to that.
RJ, last question for you. You said that you guys have been at Rivian at this for a number of years. What's been the hardest part in getting to today in the debut of these two vehicles?
Yeah, I started the company myself, and from those early years of putting the team together, pulling the early capital together, getting the suppliers to come in, finding solutions for manufacturing, all those pieces, this orchestra of activity took a lot of time to get all the right pieces to the puzzle, so to speak. And we now have all those pieces lined up, so for us it's a really exciting time to now finally show this, because we're confident in our ability to execute, because we have those big items that do take a lot of time, a lot of effort, and of course carry some risk. Those have all been set up and addressed.
And when can we buy a Rivian vehicle?
We have pre-orders opening up now, and deliveries start in the second half of 2020.
That was Rivian CEO RJ Scaringe at the LA Auto Show with our own Brad Stone. Coming up, trade tensions between China and the U.S., as we've discussed, escalating, and now it's impacting big retailers and e-commerce giants as well, from Amazon to Walmart. We will talk about how. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. Black Friday and Cyber Monday may have hit record sales this year, but retailers aren't off the hook just yet. Trade tensions between the U.S. and China are continuing to escalate, and some of America's biggest retailers are caught in the crosshairs. The Wall Street Journal reports that Amazon and Walmart have cut back purchases and orders for some of their private label products in order to get ahead of potential tariff increases. While no details were given about specific product lines, one source told the Journal that Amazon sources a bulk of its consumer electronics from China. Amazon is among many hoping for a trade truce to come out of President Trump's meeting with Chinese President Xi Jinping at the G20 summit later this week. Here to discuss, we've got Bloomberg's Emma Chandra and JumpShot CEO Darren Baker. Emma, what exactly does this mean for Amazon, Walmart, Target, and others when there is still so much uncertainty about what is going to happen?
Well, Emily, you said it best. The big problem is uncertainty for all the retailers. They don't know what's going to happen. Tariffs are spoken about or tweeted about by the president quite frequently. We think there's going to be some sort of rapprochement between the US and China, and the market often reacts, and then we see nothing happens or things look like they might get worse. I was reading a note actually from Terry Haynes today. He's the head of political analysis at Evercore, and he said that he's putting it a 95% chance that this meeting between President Trump and President Xi on the weekend at the G20 is just going to be a grip and grin. It's going to be a photo opportunity. We're not going to see any kind of resolution, and that's exactly what retailers don't want. They want to see some kind of resolution. That's why we're seeing that report in the Wall Street Journal, is that they are trying to cover their bases ahead of this possible increase and expansion of tariffs in January. They're starting to look at their supply chains. I've been speaking to a number of retail CEOs in the last few months, and they're all saying it's the uncertainty that is making things difficult for them, but they're starting to look at their supply chains. They're looking at where they can make changes. They're looking at where they can change suppliers, but that it's not easy. It's very difficult to do that. Global supply chains are, of course, extremely complex, and it's something that they could really do without, quite frankly, Emily.
And Darren, as Emma said, it's the uncertainty that is the one thing that is likely to continue. So how do you expect this to hit the bottom line of e-commerce and retail giants like Amazon and Walmart?
Yeah, I think it's a really interesting story, and there's a couple of different Amazon, Walmart storylines. So remember, Amazon, for all its behemoth e-commerce dominance, still 68% of their sales come from third-party sellers, right?
Which
means that those third-party sellers have some really interesting decisions to make. If I'm a third-party seller on Amazon and the cost of my product is 10% higher now, do I raise the price of that product and make myself less competitive? Do I eat it in the margin? Do I stop spending less on advertising on Amazon, which is a multi-billion-dollar a quarter business for them now?
Yeah,
I think that's uncertainty that's really interesting.
So, Emma, walk us through this in the context of holiday sales that are happening now, deals happening now, trying to get all of this merchandise to customers on time.
Yeah, that's absolutely right. So we've had a bumper weekend or holiday shopping weekend from Thanksgiving through to Cyber Monday. We saw millions of people shop online. We saw something like $8 billion spent online for Cyber Monday. So a lot of people saying that it was a great weekend, and there are very positive forecasts for the whole holiday season. So that's through November through to the end of December, expected to see sales growth of some 5%. But one of the things we also saw before the holiday weekend was we got a number of third quarter retail earnings reports, and one of the things that came out of that was a focus on inventory, and we're seeing that a number of retailers are bulking up their inventories in a way that we see quite often in the third quarter, but to a much higher degree. I've got a great chart for you which shows that Target's inventories are at an all-time high. They reached a record in the third quarter, so part of that is seasonal demand, but that is also them preparing for January, hoping to get a lot of products over in the States ready to be able to deal with any so they don't have to pass on increases in prices through January.
Let's talk about price, Darren, because these sales really are driven in part by price, and price wars right now are in full swing. How does this uncertainty impact the price wars?
Yeah, I think you have to look at it category by category, right? So you were mentioning earlier, there are private label categories that Amazon, like the Amazon Basics products and electronics, they are just dominant in that category. They've been less dominant in categories like women's apparel, which is a more decided purchase. And so if they are able to weather some of this storm because of their diversified revenue stream and say, I'm going to go after the women's apparel category and I'm going to cut price on H&M and all the other companies that are actually have a much less diversified revenue stream, I think there's a real opportunity for Amazon there.
So that was my next question, is do you expect certain categories to be impacted more than others, and if so, which?
I do. I think the luxury, more decided purchases will be less impacted, right? An iPhone, right? If you're willing to spend $1,000 on an iPhone, you're probably willing to spend $1,100 on an iPhone.
Even if it's tariff.
Right? I think there are other categories like the low-priced women's apparel, right? Which an Amazon hasn't made good inroads in, or the lower-priced furniture category where Wayfair has grown 160% their online sales year over year, and Amazon and Walmart aren't doing quite as well. Those are the categories where I think the big giants have an opportunity to use this to grow their online sales over time.
All right, Darren Baker, CEO of JumpShot, Emma Chandra, who covers retail for us. Thank you. We're going to continue to monitor, of course, going into this meeting with Chinese President Xi. Coming up, Salesforce impressed Wall Street with a strong third quarter beat. We will take a look at what's next for the cloud next. This is Bloomberg. Salesforce shares jumped the most in 2 years after the company reported stronger than expected third quarter results Tuesday. The cloud software maker saw revenue in the quarter jump 26% from a year earlier, driven by an expansion in the Sales Cloud and Service Cloud segments. Adjusted earnings came in 61 cents a share, far ahead of the average estimate of 50 cents, while billings grew 27%. Joining us now from New York to discuss, Bloomberg intelligence analyst Mandeep Singh. So, Mandeep, what's behind the Salesforce surge?
I think it just goes to show that this is a company that has really scored big in cloud. They continue to show remarkable consistency when it comes to growth rates, 20% plus all the time. And look, the enterprise spending is moving towards cloud. So companies like Amazon on the infrastructure side and Salesforce on the application side are the real winners, and they will continue to do well.
What does it mean for the broader tech sector to see the success here, given this can be an indicator for other similar companies and competitors?
Yes, so we did a report last week where we highlighted specifically Salesforce, ServiceNow, Adobe, and Workday as the biggest beneficiaries of this trend of cloud, especially on the application side. And they're going to acquire companies as well. So these are the big players. They are going to go out and make cloud acquisitions. And we feel 2019 will be the year where there'll be more cloud consolidation.
Well, on the note of consolidation, we've seen IBM, Red Hat, SAP, Qualtrics. Do you think we're going to see more M&A in 2019?
Absolutely, and especially if there is more volatility in the market, especially the kind of volatility we have seen in the last couple of months. Smaller cloud vendors, the ones that have revenue less than $1 billion, they are the ones, single product companies, they are the ones that are going to probably look in terms of weighing their standalone prospects versus getting acquired by a large company like Salesforce or Workday or ServiceNow. So I think we are going to see acquisitions, but companies will have to pay up. I mean, look at SAP. They paid 20 times sales for Qualtrics. So, Adobe paid similar multiples for Marketo. So I think whatever cloud multiples, even IBM, for such a big deal, Red Hat, they pay more than 10 times sales. So companies will have to pay up for cloud vendors, but I think that's where we are going with this.
We recently spoke with the HPE CEO Antonio Neri and asked about M&A, and he said that valuations are incredibly high. As you mentioned, can these valuations hold up? Do these acquisitions stand the test of time?
I think cloud is such a remarkable, predictable model that companies, especially the legacy companies, I mean, if you look at somebody like Oracle, they would love to acquire a large cloud company. So I think they will be willing to pay these high multiples just because you can buy predictable growth, which is very hard to get, on the consumer tech side or any other hardware semiconductor segment. Software cloud is the attractive, predictable segment, and I think companies will be willing to pay up for that kind of growth.
What are the companies you're watching that could be in play?
Yeah, so we think the small to mid-cap companies in cloud like Cornerstone, Box, Ultimate Software, Zendesk, these are the names that are kind of single product, but they haven't scored big like the ones that I mentioned, ServiceNow, Salesforce, Workday. So they could be in play here.
All right, Bloomberg's Mandeep Singh in New York for us. Thanks so much for continuing to follow. Could be an exciting year in M&A coming up. All right, up next, at a time when Facebook is in the spotlight for leadership issues and much, much more, former employee Mark Lucky is calling the social network out for racial inequality. We're going to speak to Lucky exclusively next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Facebook is battling criticism on all fronts, and now from an ex-worker who says the company has a racism problem. Former Facebook employee Mark Lucky wrote a lengthy internal memo explaining how difficult it was to be black and employed at the social network. In the memo, Lucky wrote, Facebook's disenfranchisement of black people on the platform mirrors the marginalization of its black employees. Racial discrimination at Facebook is real. He says he expected some sort of change or at least a reply from the CEO or COO. Instead, he got a private message from one of the highest level black employees at Facebook saying his experience may not be representative and apparently taking it personally. Mark Lucky joins us now exclusively from Atlanta to discuss. Mark, describe what it's like to be black at Facebook.
To be black at Facebook is really finding your community because you don't see a lot of people who look like you. The majority of Facebook's population is white and Asian. So when you see other black employees, you look to them for support. And that's how a lot of the conversations that were the start of this post came from.
Now, you write in the memo that not only did you feel marginalized, that you would walk by employees and at least 2 or 3 times a day, employees would look at you, tap and hold their wallets and shove their hands into their pockets. Why did you decide to go public with these feelings?
Because there are so many employees who are going through the same thing. Prior to the post going internal, I would have a conversation with an employee, a black employee, every single week, at least, who would say, I'm going through this, or I'm having a tough time, with diversity on my team, or I'm being called hostile, or things like that. And so even if every black employee didn't experience everything that was listed in the post, chances are they've experienced at least a little bit of it. And so it was tough to walk through the Facebook campus and know that this is a company that promotes inclusion and diversity, but that not being reflected in my day-to-day experiences there.
Now, Facebook executives, including Mark Zuckerberg and Sheryl Sandberg, have had a lot to say about some of the other criticism they've been getting recently about, this delay, deny, deflect with respect to Russian election meddling, leadership issues, and more. But they didn't say anything to you about this?
They did not, and that is really uncharacteristic of the company. Usually, for something that is this conversational inside the company, there is some comment from Mark or Sheryl or somebody from that team to say, okay, we're thinking about it at least. But a lot of black employees felt even more marginalized because they didn't get the same treatment or the same conversation that other issues may have received.
Now, you did get a response from Ime Archibong, who is one of the highest-ranking black employees at Facebook, who said to you, I guess I'm just confused and pretty hurt because I voted for your hire, was inspired by your willingness to strengthen the community, and that post just seems so out of character. He later tweeted that, many have diverse experiences, diverse perspectives, but that your experience, may not represent the experience of others. What do you make of that response?
Well, it's interesting because about a week before I handed in my resignation, one of the employees told me the only black employee who gets to be their authentic self is Ime. And that's really unfortunate because I think there's a disparity between the people who are close to Mark and his team and the employees who are on the ground level. So I think it's disingenuous to say that this is just my experience or that I'm out there just, putting out all kinds of information about the company that isn't true. Because I was so visible in the company is why I decided to put this out, that I didn't want to be just another black employee who left the company and didn't say anything. And actually, the day that I put the post up internally, I had 3 different people come up to me and say, actually, I handed in my resignation for the very same reason. And so I do it for them, and I'm doing it for all these people.
Facebook did respond. We got this from a spokesperson. We've been working diligently to increase the range of perspectives among those who build our products and serve the people who use them throughout the world. The growth and representation of people from more diverse groups working in many different functions across the company is a key driver of our ability to succeed. Now, importantly, you point out in your memo, this is not just about employees' experience at Facebook. You believe that this extends to the experience of black users on Facebook. How so?
Well, what's happening with black users is that there's a lack of cultural competency inside of Facebook because most of the people who work at the company are white and Asian. They really don't think of the black experience, which is a shame because black users are overperforming on the platform. And so it's a missed opportunity, it's a missed financial opportunity for Facebook to not engage with those users in a meaningful way, and also to make their experience on the platform much more difficult through all the ways that it's taking action and inaction.
Now, this, had me recall the incident back in 2016 where there were Black Lives Matter slogans written on a wall at Facebook. Employees had crossed that out and written All Lives Matter. Mark Zuckerberg did condemn that. You also worked at Twitter, and I'm curious how your experience at Facebook compared to your experience at Twitter, and whether it's more deep-seated than perhaps Zuckerberg realizes.
Yeah, the great thing about Facebook is that there are posters all through every one of its offices, particularly in its headquarters, many of them which proclaim Black Lives Matter. But as I mentioned in the post, Black Lives may matter, but you're not seeing Black lives as frequently inside of Facebook's headquarters. I think the biggest difference between Twitter and Facebook is the scale, and that Twitter really made a lot of changes in the last couple of years, a lot of improvements. Their Black Employee Resource Group is active and engaging with the community. Someone internally asked me, do you think this problem just happens at Facebook? And of course, no. But for Facebook to proclaim that it is connecting communities and really supporting these groups, what happens after they get hired? You have to think about being inclusive and not just hiring black employees.
What's your response to the general leadership issues, both Zuckerberg and Sandberg under fire for how they've handled this Russian situation? Do you think that they should still be running this company?
I think that's up to other people to decide whether they should be running the company. I think what's happening in tech is that the leaders inside of tech are thinking the best possible cases, the best possible use cases for their technology, and not thinking about the worst. And that's where you see issues like the Russian hackings, like the fake news issues, and of course this issue about the black people on its platform. So it would behoove tech companies, not just Facebook, but all, to think about, okay, how is this going to get in the hands of the wrong people, and how can we curb that before it goes to market?
Now, as I understand it, you've quit tech and you've moved to Atlanta, and you're done with Silicon Valley for good. Is that correct?
That is correct, unfortunately.
So why? Can an employee like you help Silicon Valley change?
Well, I tried to affect as much change as possible. I had a great run at Twitter and ultimately moved on because there was more that I could do, and the company wouldn't have been the great place to do that. Facebook, I was very determined to stay there as long as possible, and I was going through issues, with living in a mostly white neighborhood. I was going through issues with having my work curbed at every level, and so I said to myself, I can't give up my social life, my personal life, my health, and my security to work for a company that isn't supporting me, and also not supporting a lot of people who work in diversity. They hire a lot of these people, but they're finding that their efforts are being curtailed left and right.
Well, and black people are sorely underrepresented at Facebook, in addition to Latinos, in addition to even women, despite Sheryl Sandberg's leadership. What do you think Facebook needs to do about this?
I think Facebook needs to think beyond the pipeline and think about the non-technical roles. I think that's what doesn't get talked about a lot. Certainly there are a lot of engineers who work inside of Facebook, but there are many more roles across the company that have everything to do from VR to building internet in third world countries. And you're still not seeing that diversity on those teams. Thankfully, I worked in partnerships, which has a significant number of black people, but they're still few and far between. So I would like them to go beyond, the people that they know, the people that they've worked with previously, who are more likely to get in the door, and to engage and see who else is out there that we may not just be thinking of because we don't have personal relationships with them.
All right. Former Facebook employee Mark Lucky joining us from his new home in Atlanta. Mark, thanks so much for sharing your story with us.
Thank you.
Coming up, we head to Bloomberg's Year Ahead conference, where we'll talk to the Samsung next president, David Unn, what he has to say about the slowing global smartphone market. That is next. Plus, Intel has been at the top of the chip-making world for 3 decades, but is it about to lose its crown? That is ahead. This is Bloomberg. We've talked about the racial claims against Facebook earlier this hour. Now, one company is trying to reshape the workplace in order to avoid these kinds of issues. IBM has announced it is launching IBM Talent and Transformation, a new AI-fueled talent business to help companies, they say, build a modern workforce and address unconscious bias within the HR organization. For more, we're joined by Amy Wright, IBM Talent's managing director. So, Amy, how exactly does this technology work?
Oh, this is terrific, and we're really excited about this new business. And as technology is continuing to advance, about 120 million workers at least are going to need to be reskilled in the next 3 years. So this is a really important boardroom topic for most companies. And our new business is being launched in order to help those companies deal with that in 2 different ways. One way is to help them with reskilling their workforce on a continuous basis, as well as helping them change the ways of working for their employees. And then the second way is to help them reinvent their HR function so that HR function can be the catalyst for that change.
So how could this avoid a situation like the one Facebook finds itself in now? We just spoke to an ex-employee who says this company has a racism problem and went public with it.
Well, the fact of the matter is that AI can help with many decisions in the workplace, but it's the people that actually make the decisions. And as far as AI goes, it's actually the people that train AI. So our belief at IBM is that if we educate our employees in how to use AI, how it helps them in their jobs, they are the ones that ultimately are going to be able to impact our ways of working and make a real positive difference for bias in the workplace.
Now, you are absolutely right. It is about the people who are building the AI, and this is an industry that is dominated by men. IBM doesn't release a diversity report, but it is well known that the tech industry in general has a gender problem, has a race problem. Isn't it possible then that AI could not necessarily reduce bias, but re-enshrine bias that already exists in the algorithms?
So again, the AI algorithms are trained by people. So it is just like without technology, people can have bias. Technology can help this bias in a very dramatic way if it is trained in the right way. That's why it's so important that companies adopt, as many have, a belief system on how important diversity is, like IBM has for over 100 years, and that they train their people in the right ways to use technologies so that it can help educate a workforce and help educate decision makers to not use bias in decision making.
Reuters published a shocking story about an Amazon AI recruiting tool that basically trained itself to reject the resumes of female candidates. It simply learned that male candidates were better because so many men got hired. How do you make sure that doesn't get built into your systems as you're developing this product?
So we actually have several Watson products that assist in the recruitment area, and avoiding bias is a big part of what they do. So in today's world, the entire function of recruitment has pretty dramatically changed. So now that employees, instead of looking for a specific job, a candidate's looking for a specific job, they can actually upload their resume, and our products, our Watson Candidate Assist product, can look at their resume and look at their skills and identify what roles they would be skilled at doing. So it opens up a whole new set of capabilities and roles that an individual would be qualified to apply for, which is a totally opposite perspective than the situation you're referencing, because it opens up a whole new world of qualification for people that they perhaps didn't even know that they were ready to take on those new adventures.
How much do you think this new product will impact IBM's talent business? Do you think this will be a big revenue generator?
So our business is not about a single product. Our business is about helping corporations shift their model so that they can have a competitive differentiator with talent moving forward in the future.
All right. Amy Wright, IBM Talent Managing Director, thank you so much.
Thank you
for joining us. Well, Bloomberg's Year Ahead Summit is underway in New York, bringing together global CEOs to tackle topics facing every exec in the coming year. Everything from Brexit to trade talks and the future of technology has been part of these discussions. Bloomberg Tech's Selena Wang sat down with Samsung Next President David Un to talk about the coming year for the tech giant. She started by asking about its transition from a hardware company to a software company. Take a listen.
There's these designations that we all use to label companies. Are they hardware companies or are they software companies? And I believe that in the future, we won't use these designations because companies will just be successful or not, and products will just work or not. And the most successful products will most likely have what I call a thoughtful integration with hardware and software. But the challenge is, though, is if you think about hardware or media even, when you launch a product, when you bring it out to the marketplace, it has to be perfect. Right? Because once you sell that TV in a store, once that TV show is on air, you can't really change it. But of course, the opposite is true with software. The motto that most software companies live by is to launch early and iterate. You literally use your consumers to provide you with feedback so you can improve the product. So the challenge for companies on either side, if you come from a hardware background, is really understanding how you can be more agile and use your customers for feedback to create products and experiences that work. And then on the software side, you may launch and you can iterate, but you have to cross a certain threshold of quality so that it works for people. And this is why companies from both sides historically haven't always been able to work together effectively. And it's improving now, and what we're trying to do is within this hardware company, bring in people who have the software and services expertise to kind of inject that DNA into the bloodstream so that we can have the best of both.
The smartphone market is slowing, and Samsung and other companies have been trying to revitalize it with new innovations like the foldable smartphone that Samsung is coming out with. So as Chief Innovation Officer, how are you looking at the smartphone business in the future for Samsung? And what's your plan to really reinvigorate growth and innovation there?
Well, one of the things about Samsung is that while we have a very successful mobile business and we sell 2 TVs a second, which a lot of people don't realize, we sell in any given year 500 million displays of one form or another. And for us, that is not just separate businesses, but a huge opportunity to connect these devices so that they can create complementary experiences. So as we think about things like IoT and connected homes, as we think about the proliferation of AI, we think about these displays as touch points where we can gather information and then provide experiences that are chained together. So for example, many people, the biggest investment that they'll ever make is really in their home. And yet when you leave your home, you have no idea of what's going on. You have no relationship or ability to communicate with it as an entity. And so what we're seeing now is not just our company, but other companies giving consumers the ability to have a relationship and a dialogue with their homes. And this is supported and will be sort of fortified by having cameras and sensors and everything from climate control and energy usage to lighting, all connected. And so when you talk about a specific device like a smartphone or a TV, they can't just be seen as standalone devices, but seen as one of a portfolio of things that can give consumers a better experience. So when I'm away from my home, I might be able to send a message to my family and it shows up on the display in our refrigerator. Or when I walk in front of my TV, the photos that I took over Thanksgiving break can easily be shown on my TV or the TV of someone that I care to share it with. So as we think about the future of our businesses, it's not just a pure hardware business, but we think about how we can create great experiences, right? Which again is what I call the thoughtful integration of hardware and software.
How is Samsung navigating the current trade tensions between the U.S. and China? And is that impacting your investment strategy at all?
Well, I'm not in the hardware business. I focus on working with startups, as I said. And our belief is that while Silicon Valley is a fantastic source of innovation, for me, it's almost more of a mentality. It's a way of thinking. And so innovation can be found everywhere. And we have set up offices and we have done deals all over the globe. So we will continue to do that. And we want to be wherever the entrepreneurs are.
Samsung next president David Ng speaking there with Bloomberg Tech's Selena Wang. Still ahead, Intel's dominance in chip making is being challenged by Taiwan Semi. We're going to have all the details next. This is Bloomberg. For more than 30 years, Intel has been the dominant force in chip making, producing the most important component in the bulk of the world's computers. But that run is under threat by the biggest chip maker in Taiwan, which is helping the likes of Amazon and Apple and others shed the industry's reliance on Intel's chips. Let's bring in Bloomberg Tech's Ian King, who of course covers the chip industry for us. Now, Taiwan Semiconductor is the 3rd biggest chip maker in the world, though not necessarily a household name.
Right.
Why does Intel have to be worried here?
Well, production technology is important in the chip industry in a way that it isn't in other industries. You're not just making things more cheaply, you're not just making things more efficiently. It actually contributes to making the products better. Intel dominates in the computers. It makes a lot of money from making chips for computers. If TSMC's production technology is as good as or better, then its customers can rival Intel, where Intel makes a lot of money, which is in high-end computing.
And its customers include Apple, right? I mean, just how dominant is Taiwan Semi?
Yeah, I mean, if you have a smartphone, the chances are that the main component in that smartphone was made in one of their factories. And
Intel lost that battle long ago, didn't they?
They did, yes. I mean, they have what's called a modem, which is a different type of chip in Apple, but really the main microprocessor, the absolute electronic guts of the iPhone is made by TSMC because Intel didn't put its leading edge stuff into that particular market.
Now, we've talked about Intel's dominance being challenged now for many years.
Yeah.
Do you see them at this point truly on the brink?
It's hard to say. I mean, they've faced many challenges. You know, they've always been on the brink, and they always seem to find a way, but we've never seen anything like this. We've never seen them take multiple years to sort out a problem like this.
They've also taken several months now to find their new CEO. What is the progress on that?
We don't know. You know, we've done a lot of reporting on this. We're looking, we're hearing various rumors, but as you pointed out, it's taken perhaps longer than some would have hoped.
So if you could put money on it, and I know you're a journalist, so you can't, but you know, what do you wager the chip industry looks like in 5 years?
Everybody's been writing Intel off for so long now. Intel's always been on the cusp, and it's always found a way. What the intelligent analysis that I've been given says Intel perhaps isn't as dominant, but it finds other ways to grow.
All right, Ian King, as always, good to have you here. Talk to you again in 5 years, and a lot in between. Okay, that does it for this edition of Bloomberg Technology. Bloomberg Tech, of course, live streaming on Twitter. You can check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.